to kick us off, thanks so much for taking the time to do the interview. I'm wondering if you could tell us a bit about Southstar Battery Metals.
Hi, James. Pleasure to be with you. Southstar is really going to be the first new graphite producing assets in the Americas. We have a fantastic project called the Santa Cruz Graphite Project in Brazil. We're just kicking off construction now, 12-month construction and commissioning schedule, so we should be in commercial production kind of mid next year. We have 2 additional phases to follow that up, about 2 years of operations at 5,000 tons, and we'll go to 25,000 tons for about 2 years and then step up to 50,000 tons. In addition, we have a really fantastic project in Alabama in the US. It's a little bit earlier stage, so it's more or less 3 years behind where we are in Santa Cruz, but really our goals and objectives are to have 2 producing mines feeding kind of a centrally located value add plant. Will be vertically integrated, be able to go all the way from concentrates for a variety of industrial applications and battery metals applications, all the way through to finished goods that then feed directly into battery metals, be it alkaline, be it lithium ion, EVs, et cetera.
You touched on a few selling points with regards to Southstar, but I'm wondering if you could go into a bit more detail about what differentiates you from other graphite explorers.
Sure. I think that's important for really investors and folks that are interested in the battery metal space in general. If you think of graphite, there's kind of 2 basic buckets. There's the industrial applications, which is refractories, high strength steels, those types of applications that's growing more or less at GDP, 3-4% over time, per year. And then you have the second bucket, which is really being driven by energy transition, renewables, green energy, and that's really focused right now on the EV space, and I think it'll expand into other areas as well as more grid energy as well for storage and things like that. But I think when you look at the 50 some odd graphite projects that are out there specific to kind of our industry itself, we're really trying to focus on value add. Our goals are to basically get into production and scale this things up. We're not in this to trade paper and sell ourselves to somebody in the future. We're very focused on creating value for our clients, being able to deliver spec material on time and as promised. We think if we do that well, there's plenty of space for everybody. So we don't view this market as kind of a zero-sum game. I think when you look out across the space, basically 10 to 15 new graphite mines have to come online between now and 2025, and that doubles again basically by 2030 for us to have a shot as a sector to keep up with the demand. So supply and demand is really distorted, and over time it's driving the prices of graphite up. At the same time, I think there's very few projects that are actually able to get online and come into production. So when you look at the battery metal space, it can take you anywhere from 12 to 24 months to actually get your material qualified. If you want to sell it to, say, Duracell or Everready, which are alkaline batteries, your AA's, your AAA's, et cetera, it can take you 12 months of a gated process to say, okay, we're ready to buy your material now. For Tesla, Ford, et cetera, it can take you 24 months to maybe even 30 months, depending on the car manufacturer. So it's not like you turn the plant on and suddenly you're selling material to Tesla. So there's some challenges certainly to get up and running. The great thing about Santa Cruz, our project in Brazil, is that we're profitable from day one. We'll be starting basically getting material into the market next year, which again will be the first new production of graphite cons in the Americas, and we'll be profitable from day one. So we're starting off at small scale, be very intelligent about how we're allocating capital, and then we can get those relationships, which are super important for industrial applications, developed so we can sign offtake agreements and sign commercial relationships so that when we scale to phase 2 or phase 3, we're doing it with our material already sold. So we think that's a smart way to go about it. There's not so many companies out there that are really kind of doing it this way. So we think it's a big advantage. It's a smart way to allocate capital. And realistically, it's one of the few ways to kind of get into production with reasonable CapEx and reasonable OpEx, and at the same time, develop those commercial relationships, which are key to industrial metals in general.
Okay, very interesting. Thank you for elaborating. You mentioned a couple of points there. Your early stage profitability and the time periods to get materials to market, these are obviously some key factors for investors. What else do you think investors should be looking for when doing due diligence on a battery metals company?
Sure. I think there's lots of really good information out there, and there's lots of misinformation out there. There's lots of stories being sold that you start producing and suddenly you can sell it. Battery metals, and certainly graphite, is not gold, it's not copper. There's no exchanges that you can sell into effectively. It's very driven by commercial relationships that you develop over time. And most of the suppliers are really looking for, consistent supply that can be provided, for 5 years, 10 years. So you really got to work hard on developing those commercial relationships and have a realistic business plan. There's lots of companies that are saying we're going to start selling immediately, but it's like, okay, we're going to spend $150 million on a CapEx program, and it takes you 2 years basically for you to qualify material for the EV space. How are you going to be profitable within that time frame? So really, I think it's about those commercial relationships, and our company basically has a commercial plan which for 0 to 18 months we're really focused on industrial applications. We'll take about 400 or 500 tons, we'll send it to a third-party toll mill, we'll upgrade that material for the battery space to be able to work through these different qualification processes. Alkaline batteries will come online first, and we'll work on expandable graphites, and then we'll work on EV space. So in the meantime, at small scale, we've got basically a $10 million CapEx for phase one. We'll get those commercial relationships developed, material qualified for a variety of applications, so that by the time that we're really focused on phase two and phase three, we already have contracts in place that will help us basically place that material. And maybe, based on those relationships and contracts, we skip phase two and we go straight to phase three, 50,000 tons. But I think when you look at the space, it's important to focus on cost. You want to be in your first quartile of cost. You want to understand the capital stack and how funding is actually going to be provided for these big CapEx projects. And you want to see, the commercial relationships that are really going to be developed over time, or the likelihood of those commercial relationships being developed, so that you can be profitable. You can actually, not have to always go back to the markets for additional funding, and be self-sufficient. So that's really our goals. We've put together a commercial plan that allows us to meet those different requirements, and we're doing this in a scaled fashion. So when you look out across the 50 some odd graphite projects out there, investors really need to be conscious about how the sector really works and the requirements it takes to actually have sales, clients, and the pricing associated with that, because the pricing is opaque. Like I said, there's no exchanges. So it's really based on those relationships that you develop over time, and the trust that you develop with those relationships. Because again, suppliers are just looking for good material that's supplied, as agreed and according to spec.
On a slightly different tack, I'm wondering if you could go into some detail about how capital structure affects the growth of a company like SouthStar.
Sure, and I think that's another very important item for investors to understand. When you have markets like gold and copper, and there's a Chicago Board of Trade or an LME or whoever that you can sell into, it's an infinite market, right? I mean, if you produce it, you can sell it at spot, and that's fantastic. For battery metals, it's not like that. There's not some central location that you can sell, nickel, cobalt, whatever sometimes, or graphite, certainly lithium. The pricing is a bit more opaque. So when you look at the funding alternatives out there, you've basically got, let's say, streaming and royalty companies is one alternative, which we were able to sign a fantastic agreement with Sprott, streaming and royalty for phase one, phase two for us. You've got retail investors, which at the moment is providing a lot of the dollars for different things, but it's a limited pool of capital. You've got institutional investors, which really, to my knowledge, there's been a couple institutions that have moved into this space, but it's really been limited so far. There's lots of ESG funds, for example, which are trying to find investment alternatives, but they really haven't moved into our space very much. And then you've got bank debt, sort of traditional project financing. And again, for a lot of these projects, the banks are really struggling to kind of understand the commercial side of it, the cost side of it, and the projection of future revenue. So it's been limited in terms of what it's been able to provide. So really right now, the burden has been on companies to go out there and kind of really develop relationships with retail investors and maybe a limited pool of streaming and royalty companies. But over time, I think that will develop and the institutional investors will come in. I think there's certainly going to be a period of consolidation within the space. And I think you see certain movements toward that in general, but the funding mechanisms are limited. So when you look at projects that have, say, 150 or 250 or $350 million CapEx programs for the facilities, in many cases, those are unfinanceable at the current market conditions because there's just not the funding out there. So, really it's hard to put together a capital program for something much more than 50 or 100 million bucks. There has been some movement within, for example, the US government. There's been Department of Defense and Department of Energy programs that have been made available for specific cases. The EU is doing something similar to that. And there's different development banks around the world that are also trying to move into that space. But effective dollars being supplied for construction of new projects has been very limited, and it is certainly tough. So I think our approach of starting small and then scaling up is smart and really one of the few ways that you can get sufficient capital to do what you need to do to get in production, and then you can scale from there. If you have a balance sheet and commercial arrangements prearranged and pricing, banks can understand that and then get a level of comfort. So I think over time there'll be more funding institutions and options available to us, but right now it's certainly very limited.
There's been obviously a huge shift towards ESG. I'm wondering, how can SouthStar really appeal to retail investors who are interested in ESG?
I think it's really interesting to me when you look out across the space, because you see different companies, battery manufacturer companies that can go out and raise $1 billion just really banging the gong on ESG investments. So this is, there's lots of examples in Europe. There's lots of examples in the US and around the world in general. And it's interesting to me because I think the numbers are big, right? I mean, their CapEx is really many times along the line of 500 million and up. So I think it's something that investment banks certainly get really excited about and thinking about, we're going to get some good fees on this. So there's a lot of incentive to pursue that. But when you look out across the space, there's large capital pools that are really being allocated towards ESG funds and socially responsible sort of funding mechanisms. But it really hasn't infiltrated into the resource sector very much. And I think if you look at, for example, lithium, the pricing associated with lithium has gone 12 to 15 times what it was, just 18, 24 months ago. So I think the pricing mechanism really created an opportune moment for lithium. I think graphite is right there. There really is no additional production capacity in the system right now, and pricing has been basically going up 3 to 5% month over month. So I think when you look at the ESG space from a mineral resource side, people think, oh, mines and mineral resource projects aren't that environmentally friendly. But when you look out across how these materials are going to be used, really the basic building blocks that'll go into the energy transition that we all want to see as we kind of decrease the carbon footprint, these sorts of materials like graphite and others are going to be essential. And we're not going to get to the goals of 2030, 2040, 2050 of really decreasing the carbon footprint without some of these key strategic metals and projects associated with those metals being brought online. So we think it's a fantastic opportunity for ESG funds. We think it's a perfect investment environment for it. And I think SouthStar and some other projects out there are actually going to be the first that are going to be brought into production. We'll have a first mover advantage of getting material into the marketplace and getting those commercial relationships established. So we think it's a fantastic opportunity. This trend is not going away. The electrification process is going to continue to develop, and really companies that can demonstrate that they're good neighbors, their environments are responsible, and really are helping bring about the raw materials that are required for this transition, I think are going to be very successful.
What are some catalysts for the business, and what can investors get excited for about SouthStar Battery Metals in the next 12 months?
Sure, and I think that's also fantastic. Again, we're not an exploration story. We're really a production story. So we're obviously starting construction on Santa Cruz. In terms of catalysts, I think the commissioning of our phase 1 plant, kind of second quarter next year, will be one big catalyst. The start of commercial production will be another big catalyst. We're negotiating several commercial agreements currently, so when we get those published, that'll be another big catalyst. We continue to do value add optimizations. We've done a bunch of testing for a variety of value add battery applications. So we're creating samples. We're sending those samples out to a variety of different institutions. So I think when we actually get those commercial relationships signed, that'll be a huge catalyst. We are doing the environmental permitting for phase 2 as well as phase 3. So about the time that we're commissioning our phase 1 plant, we should be close to having our phase 2 and phase 3 permits in hand. So I think for Santa Cruz, those are kind of what we see as catalysts really through the end of 23. On Alabama, we're getting ready to start an exploration program there. We just sent 3 tons of material to North Carolina State in the US. They're going to create about 15 kilos of con for us. We'll ship that off for different battery testing. So we'll get those results published. We should have our maiden resource put together early next year, and a kind of a preliminary environmental characterization. So I think between the met work, the initial drilling program, the preliminary resource, and the technical report associated with the 43101, that'll really drive a lot of interest. So in terms of catalysts here over the next 18 months, those are really what we're looking to produce. That's how we think we'll create a lot of value for our shareholders. And I think, again, we'll be the first new production, and our goals are really to kind of take the expertise that we've developed in Brazil and the Santa Cruz project and spin Alabama up as quickly as possible. So I think that's really kind of what we see is coming up, and that'll add a lot of value to us, as well as shareholders and clients.